Good afternoon, everybody, and welcome to this edition of our Live Market Analysis USA edition. My name is Carl Capolingua. I'm the market analyst over here at ThinkMarkets Australia, and you might wonder, hey, what is a market analyst in Australia doing talking about US stocks? Well, there is a world of opportunity out there for Aussie investors, and this is hopefully a way that we can investigate some of that. It's a pretty simple format today, whether you are, that's not where we want to go, whether you are in the US and looking for some technical analysis on US stocks, or you're here managing potentially a self-managed super fund or just your own portfolio, want to get some exposure to US shares. Ask me questions about those stocks and I'll give you my best technical and fundamental analysis reader. Get the questions rolling in if you're online, either in the Zoom or you're watching on any of the streaming services via YouTube, LinkedIn, Facebook or Twitter. And we will have a look at some of these US shares. Now that is the Amy Broker chart over here. By pure coincidence, just because of what I was looking at before we started the show, we've got an Aussie stock, but we'll flick over to the US ones there. So waiting for requests from the crew here. Mark's come in with Oracle, ORCL, which actually looks pretty good. And I say pretty good and not amazing, because I reckon there's probably a little bit of supply over here we're dealing with, and get the zoom right, we can see that's the case. So let's start at the start. Let's look at our trends first. Our short-term trend ribbon is our 21 and 34 exponential moving average. Why those durations? They just work, and we find that they're a very good indicator of what the underlying trend is. That is the underlying trend in the price action and the candles. And on the way up, the light green ribbon, as such here, tends to support price. When the short-term trend is starting to lose its momentum, the ribbon turns orange, and when it turns pink, we're in a downtrend. That one didn't last for very long before it went back to orange and then up again. Same for the long-term trend, same conceptually, but we here have instead the 144 and 233 EMAs. Why EMAs and not just simple MAs? I know you see a lot of quote-unquote experts use the 50 period and 200 period moving average, and maybe it works. I've never bothered, but I've just found they're always so slow. By the time they're talking of these quote unquote golden crosses or death crosses, the market's already turned. Exponential moving averages, just through the calculation, weight the more recent data in the moving average sample greater, looking for the right word there, greater weighting on the recent data compared to the older data. So they move. If something is starting to move very quickly, that's reflected better in exponential moving averages and moving averages. Same traffic light system here. So green is go. So good news is, well, just in the trends first pass look, let me change that and that. First pass look would suggest that the long-term trend is up. That's a big tick. And the short-term trend also is up. That's another big tick. Next, I just changed it and it didn't work. There we go. Next thing I do, actually just stay out there, because what I would like to do once I'm zoomed out is have a look for where I'm going to see major points of supply. So these are major points of supply from the past, and let's label that one as a major POS, abbreviated. Why do we think it's a major point of supply? Well, point of supply, obviously excess supply in the market, price will come down. Did the price come down from there? Of course it did. So we can see that there was supply in there in the past. It's clear as day. Does that automatically mean there'll be supply in the future? Not necessarily, but it is likely that some of the people who are buying around here, were there people buying around here? Yes, there were people buying around there. How do you know people were buying around there? Because it was going up, right? It has to be the case. Some of them would no doubt have regretted that decision to buy around that level, and they'd be waiting for that area to get out again. It's going to create what I call some latent supply in the market. So we could see that this area acts as a future point of supply. And the reason why I need to do that when I'm zoomed out is because if I'm zoomed too far in, I can't see that point of supply now. If I'm just looking at the chart on this basis, I have no idea what my reward to risk is. I can see my risk, because if I'm going to get in around current levels, and I don't mind that, by the way, if you want to fast forward to the bit where I say buy, hold, sell, and get past all the education stuff, I'm probably going to set my stop loss somewhere around there. If I'm really conservative, maybe I can go a bit tighter under there. Okay. But if that's my risk area, then I need to have at least 1-to-1 on my reward area. Okay, so if I'm zoomed in, I can't see that. That's why I start with that zoom out. I can see where those potential pressure points are going to be in terms of supply. So now we can zoom in. We know where that level is going to be. Next thing I like to do is look at my price action. They are my peaks and troughs. Now, peaks and troughs move a lot quicker than those moving averages. Moving averages dumb things down. Peaks and troughs are what's happening, along with my candlesticks, which are blow-by-blow accounts of demand and supply and the balance or imbalance between. And here I want to see rising peaks, rising troughs. So rising troughs, increasing demand. That's the only way you can get rising troughs, is when you pull back and you can't take out last time's low point because there's too much demand in the system. The price has gone up and people are still demanding more. They're pushing the price back up again. And then rising peaks also, we're taking out areas of supply. Supply removal, very important. It's a little bit sketchy in here, but let me do my best. Just that there's a little, obviously, peak trough in here and one in there. So I'm happy with that. Rising peaks, rising troughs. And there's no surprise that we've had to pause a little bit just around this little point of supply here. Okay, but we've hit it pretty well. Yes, we expect there to be some supply here. Why? Well, was there supply there? Yes, there was supply there. Was it? Yes, there was supply there. So, there's no surprise. And this is what I like to see when we hit a point of supply and really the candles are still quite strong. There are no major black candles there. There are no supply side fingerprints, so upper shadows, black candles. So I think we're pretty confident here with the right price action, with the right trends. I can't see why you wouldn't add some risk to this one. So pretty happy with it. Could I go based upon last night's candle? It's a 7 out of 10 candle. It's not bad. Yeah, look, I don't see what. I don't want to be too pedantic about these things because, the way I add risk is pretty conservative. So look, that doesn't look too bad. Now, I would have to look not just at Oracle, I would have to run the scan and come up with all of the best stocks for the day. And if Oracle's the best, then I'd go plus 1/3. And I'm assuming if you've put it to me, Mark, you think maybe it's pretty good. No objections to adding some risk based upon what I can see. And I don't know what's going to happen next, unfortunately. If you've tuned in to find out what's going to happen tomorrow, I don't know. All I can give you is balance of probability stuff based upon what I can see in the trends, the price action, the candles, the reward to risk. There's really nothing holding me back from adding some risk here on Oracle. What we can also do in these sessions, if you're new to the sessions, is have a look at the fundamental valuation for the company as well. So let's head over here. Let's go ORCL, type that in. And this is the Thomson Reuters Refinitiv Icon spreadsheet. So Thomson Reuters, one of the major global financial data gatherers, what's the right word there, aggregators. And Refinitiv Icon is a product that they have, costs about $2,200 US per month to get a subscription to this. Why does it cost so much? Well, because to be fair, they do a lot of work. They go out and they survey brokers all over the world, the smartest of the smartest, the ones that graduated at top of their class and now work at Goldman Sachs, Bank of America, Citigroup, UBS, Credit Suisse, perhaps, Deutsche Bank, perhaps. And, ladies and gentlemen with half an alphabet after their name on the business card, sitting up in gleaming office towers in the major financial centers of the world, spending all day analyzing these companies. And there's value in that. They are getting paid hundreds of thousands, collectively tens of millions, hundreds of millions of dollars a year to do this research. And we get access to that research because Thomson Reuters says, hey, look, what do you reckon Oracle's revenue is going to be for the current calendar year, current financial year, and then for the next one and the next one after that, okay? And I think there is great value in having this data. That's why it costs so much to get. And we've got historical data, the stuff that's in the bag, of course. So we do have 27 brokers covering it. Their highest target, always interesting to see where the range is, because if we see that the current price is kind of at the bottom of the high-low range, that's a good thing. But anyway, 120 for the high, 55 for the low, the average target 96.54, which puts it, a little bit above where the current price is, isn't it, by about 7%. So brokers have a price target and then they'll have a rating. 4 of those 27 brokers have it as a strong buy. 9 as a buy, 18 as a hold, 3 as a sell. So this is a bit polarizing, isn't it? Old Oracle. Next place I like to go, now obviously you can look at all the data there, whatever tickles you fancy, but where I like to go next, to keep it simple, is to look at the EPS line, because ultimately this is what you get as a shareholder. These are your returns. Well, look, your returns are your dividends, but your EPS determines your capital growth as well. So EPS really summarizes what you should be getting in your capital growth and your yield as well, because you can't pay dividends unless you've got earnings, unless you're very creative, of course, as an accountant. But I like to see bottom left, top right growth here. So a nice trend in earnings, even through something as hairy as a pandemic or massive supply chain shortage or rampaging inflation and higher cost of living and uncertainty, all sorts of uncertainty. And to be fair, Oracle has done it. It's done it in spades. Very, very impressive to see that. And then looking forward, obviously, because we don't get historical earnings. Historical earnings, they're in the bag. We get the company's future earnings. And here we have to take the big leap of faith and assume the brokers have got it right with all their research. And it's still, a great trend there, to the point where we get to the compound annual growth rate, the all-important CAGR, which is 12% over the next 3 years. Now, to put it into perspective, the typical, the market typically grows at around about 8%. In a good year, it might be 9 or 10%, it could be 11%. In a bad year, it might be 3 or 4%. It might be nothing. 8%, 9%, 7, 8, 9. I'm not even going to tell you which one it is. Let's say it's about 8. And go and Google that, by the way. And hey, if I'm wrong, then tell me about it. But it's about that. And the average PE for the market, coincidentally, is 15. Okay, over the long run. The biggest stock market crashes have come when the market PE has got above 20, and the biggest bear market lows have come when it's around 10, but 15 in the middle. So we can see we're getting better than market growth. And this is the gist of this spreadsheet. Better than market growth at the same price as the market. And I think that's pretty neat. Okay, so my spreadsheet automatically, I know when I see 12 here and 15 here, I know there's going to be something in this, okay? Because that's just the way my spreadsheet works. It's looking for mispricing opportunities through here and here. And it's saying, yep, there's probably about 10% upside to fair value based upon my opinion, and therefore not too dissimilar to what the brokers are saying here. So, could get anywhere towards 100 based upon that. No reason to doubt the brokers, I think, because that 15 is going to be well below the 5-year historical range of PE. So it's saying that's a really good hurdle rate. Obviously the lower the PE, the higher to account we're holding the company in terms of its valuation. And it all looks pretty reasonable here as well. So I'm going to say Oracle looks pretty good value, and the chart is looking pretty good as well. And it is nice, isn't it, when the fundamentals and the technicals come together. Okay, let's have a look at the next one from Haraju. We're looking at Arlo, and we have looked at this over the last couple of weeks. ARLO still looks good. What did we say? It was a turnaround play. We've seen a massive demand event, which tells us there's been a pivotal change in thinking. I'm not sure if I said to add some risk on this. I said maybe we were watching to do it, and I can see every reason to continue to do that, Haraju. In fact, I think based upon the last couple of candles, I would happily do this. So this is a straight up add some risk for me. I like these two candles. I like the fact that it really has not pulled back very far into this demand zone, and also that long-term trend zone is starting to offer dynamic support. Okay, so let's go dynamic. Yeah, look, it's demand. So support is a silly word, isn't it? You look in technical analysis books. So you go into your typical TA book, okay, and you hear the words support and resistance. And I use them from time to time because that's what people understand. But I just think they're quite useless terms, because really support, how does support occur? Support is really excess demand, isn't it? Excess demand, okay, and excess supply. That's what we're really talking about, isn't it? And those technical analysis books, they have all those wonderful indicators, all those squiggly lines, and I think it just confuses the issue, because at the end of the day, good TA is just about what's happening with demand and supply, because at the end of the day, that's what moves prices. And I'm a little bit of a different technical analyst, probably to your average one, to be honest. Now, and again, it's up to you to choose what suits your way of thinking, your personality, and what you believe is not bullshit. Now, let us keep moving on that note and say that this long-term trend zone is very important, because you can see on the way up, it tends to support price, okay? There's that word support. We tend to see excess demand when we get into the zone, and then we tend to see excess supply when we come into the zone from beneath it, when the trend has changed. And you can see the traffic light system, how effective it is, and then here as well, how amazing my trend ribbons are at forecasting. Really, they are forecasting where these levels are going to be. So the fact that we have that dynamic demand now is very important. And the other thing I'll say about this is I love to see these huge run-ups. Okay, I love to buy after the big run-up. And isn't that counterintuitive in itself? Because most people automatically say, no, that's gone up too much. No, I've missed it. I can't buy that now. I mean, it just, if I buy it at $6, it was only $3 not that long ago. What? If I buy it at $6, that's double. That's just silly. And, if I buy it at $6, it's going to go back to $3. You know what? It's not at $3 anymore. It's at $6 for a good reason. It didn't get to $6 because it's a bad stock. It didn't get to $6 because its prospects are lousy. It got to $6 because its prospects are much better than they were at $3. And history shows, and go read the research on this, Google the research, that when you have these huge rallies like this, particularly on earnings, that the price tends to be higher over the next 3, 6, and 12 months. And that's because something incredibly good has changed. And the fact that we don't pull back after that, because typically you got to remember that the oldest rule in economics is that when something goes up a lot, there must be more supply. And that doesn't work in the stock market, not necessarily so. When something goes up a lot and there isn't more supply, it's telling you that the supply is hanging on. Why is the supply hanging on? Because it's not expensive. So you need to retune your brain. You need to stop looking at stuff that's gone up a lot and saying, oh, that's expensive now. Because if there isn't a supply response from that move, it's not expensive. The market isn't thinking it's expensive. Only you're thinking it's expensive. That is faulty logic. You need to look at something that's gone up a lot and go, oh, that must be good. That must be good. It's a very different way of thinking. I'm plus 1/3 on that one. I can't remember what the fundamentals are on this. So if you're new to the platform so that we're in right now, you're probably a little bit confused. You're probably going, this guy said he's going to talk about charts, but all he's done is just really talk. And if you prefer for me not to do the education stuff, let me know. But we do find that people tend to prefer that format. Okay, but we will get to all the stocks you require. Trust me on that one also. I'll somehow fit them in. Okay, we don't have a lot of consensus data here for Arlo, and we're only just going to start to make some profit this year. So with a massive 180% compound annual growth rate, I can tell you right now, my spreadsheet is going to be broken because it needs a bit more data and a bit more, sort of history and forecast numbers as well to make a really good decision on what the value is. So let's skip that one, but say the chart is looking very, very interesting. Let's head back over here and then look at the next one. We had one come in from Nicholas, which has come by James. And Nick is online, by the way. You heard him speaking earlier on. He is the ThinkMarkets customer support trading guru. He's the one you want to talk to if you've got problems with the platform. He's the expert, and he can also get your account open and up and running as well. But coming through from one of our ThinkMarkets clients is Google. And if I start typing it in properly, it'll pop up. There we go. Last time we talked about it, it looks like we said, plus 1/3. So you can see I like to keep my scratchings on the screen because I did say plus 1/3 down here. I said if it closes above the supply zone, which it didn't, unfortunately, plus another 1/3, and it's actually pulled back since then. So we're kind of probably about break even on that first 1/3. And this is exactly why I prefer to get in steps, okay? So if it closed above here, it's got to be good, right? We've taken out that supply plus 1/3. If we don't, then I've only got 1/3. If this plummets tomorrow and I get signals to get out, then I'm only losing on the 1/3 that I put in. I didn't jump all the way in, and there was good reason not to jump all the way in. Why? Well, look at the long-term downtrend. It is a monster. And it is extremely powerful. It has shown to be extremely powerful on Alphabet. So I don't think we want to muck around with it. But that doesn't mean we can't add some risk, because we're just dipping the toe in the water, and we've got a pretty good system for getting out of that if it doesn't work out right. That's the other thing. Some people will add risk, but if they don't have a system for getting themselves out of that risk, that's where it becomes dangerous. If you've got a system for adding risk, but also a system for getting out of risk, then throw the risk on, have a go, right? I like a bunch of stuff here. So, this is all good. And I'm not drawing a trend line because I don't do trend lines, as you would have figured out. Another big TA mistake, in my opinion. But I am saying that the points of demand, or the major points of demand, are rising. So that's a good sign. Okay, that's what I like about that. And I'm seeing more white candles come in than black candles. That's also very impressive. And I'm seeing fairly recently the price action is quite good, high peaks and high troughs. And I love this drive. What this doesn't have that Arlo had was this sort of the really shallow pullback without the nasty candles, because I don't like this candle here. So this is not a good candle. This is not terrible, but it's not great either. And then we sort of come inside here on the Harami pattern, and then a little slip again here. So it's under some supply side pressure in a market that's actually been pretty good for the last couple of sessions, and therefore we should see the relative strength trending down here. So a little bit concerned about this one. Do we need to exit our 1/3 yet? No, I don't think so. I don't think it's that bad, but you can tell from my comments that I'm a bit growing a bit more cautious on the likelihood that this trend is turning back to the upside. And I think, just for precaution's sake, given some of the uncertainties with that longer term trend, and we're a little bit ambitious maybe with that first third, that if we were to close beneath that low there, that candle low, and this is a little bit jittery, but I think the broader market probably warrants it. Now, what was last night's low? So you can see up here 99.70, and we've got the $100 round number, and we've got 99.74. Okay, what's this? See, we're in there. Okay, interesting. $100, two little lows there. Let's just give it some room. So let's knock at least a couple of % off that, I'd say, just to give the market the ability to vibrate. And let's go like a 97. So let's see what it looks like. 97, so 97.77. Okay. So somewhere around there, I think. Let's get rid of that because that never happened. Yeah, look, a close beneath that sort of level, and I think we're heading in the wrong direction. We're confirming that this has rolled back over in that long-term uptrend. So hold on that basis, but there's your sell level. Okay. Otherwise, what could go right here? Let's have a look at the right situation if we are looking to add risk, and we could certainly wait for a close above that if it occurs, but there'll be some other stuff that will happen now in between. So if we start to see actually even a push up here, because we've got those two little lower shadows just below 100, we're going to form a higher trough, and that's going to make this stop area very, very solid indeed. And if you've got some nice white candles in here, the demand side candles in this zone here, it'll be a green zone in a second. So somewhere around here, then I think you could even add another third here on the basis that it is growing, very likely that this is turning around. And then the final third is still being added on the close above here. That's where your final third is going. So there's your roadmap, I think, for trading Alphabet. Let us quickly, super quick, because I'm pretty sure we did it maybe last week, but for the people maybe that weren't here last week, let's check it out again. And I won't go through the explanation of how the spreadsheet works because we know how to do that. Only 9 estimates here. We've got an average target of 124.78, which allows for 23% upside. The broker's overwhelmingly sitting on the buy rating side there. In terms of EPS, it has been a very solid performance even through the pandemic and post-pandemic period. And we're expecting some very, very good growth going forward, 18%. And we are still only paying about 15 times. So, it looks even cheaper than the Oracle trade that we looked at before. So dynamic F, this is a dynamic, so it will change based upon what's happening in this line here. Okay, so if I go dynamic H, we're looking at historical PEs, so what the brokers have been prepared to pay in the past, and you can see they've been prepared to pay significantly more than what they're looking to pay in the future. So if we were to use that historical PE, you can see how much the valuation goes up. But that's the history, right? And I don't think that's relevant. Sometimes, and there was a time where I was using historicals during the pandemic because you couldn't use the current. The current was completely out of whack. The market had completely crashed and melted down. So historicals had some relevance. Now I'm just happy to use the F. If I wanted to use them all, then I'll use something like that. But it depends on how I feel, basically. But I think F is fine here. So I think this is quite cheap, actually. So 14.4% upside to fair value based upon what my spreadsheet says. Let's head back over here and go for the next one, which is ARQQ. Now I'm going to try, and it's not what I'm familiar with, ARQQ. I'm going to try and get it here. Which is that one there. Okay, so this one has come through from Jay on the YouTube, and I know Jay likes these sorts of charts. They're about 1% of their former glory, and hoping that they're turning around. It looks like a bit of a style thing here. It's the opposite of my style. I'm not saying that's right or wrong. It's just I just won't be able to give you much analysis on something that has a chart like that, because how can I do my price action? How can I draw in my peaks and troughs? And the candles are very flat because the scale has compressed them. But I can say that the trend is very clearly established to the downside, both in the short term and long term. If I squint, I can see some high peaks and high troughs and some reasonable candles, which would suggest there is some demand returning to the system. Would I buy it? It's just too hard. I can't do the analysis. If I can't do the analysis, I can't really give you a buy. But it looks like there is some sort of intermediate low being set around here. And if you were to buy it, at least you've got a pretty clear-cut zone where you would get out. You know what your risk is beneath that level. And if you're buying something in the US at around $1.30 and you're getting out beneath 95, I guess you've got 40% downside, and your upside could be anything. So on that basis, if you know enough about the company, and I don't, then possibly you would want to own it. But I'm going to go pass on that one. just a pass on that one. So let us head over here, and just out of curiosity and nothing more than that, ARQQ, and it might be over the counter as well. No, it's come up. And we can see we don't have a lot of broker coverage, just the three. EPS line, it looks a bit flattish. And from 20, let me get this right first, and then it'll make more sense. So minus 7% compound annual growth rate over the look forward period, which is not really exciting, but you're not paying a whole lot for it either, with a P of 6.6. So you might go, well, straight up, I can't buy that because its earnings are expected to contract over the next few years. But if it's cheap enough, then that can still work out to be an attractive combination. Is it cheap enough? Well, the spreadsheet's saying, no, it's not quite cheap enough. You'd actually want to get a little bit more of a discount for something that's got that sort of earnings growth. And with 6 being, look, hard to say reasonable or not, they're going to say that no reason for me to dispute what the spreadsheet says at this stage. Let us keep moving. Nick's saying, if you've got any feedback or need help setting up an account, feel free to email him at ncoulson@thinkmarkets.com. And if you haven't seen my bear market ebook, Strategies for Surviving and Thriving in a Bear Market, he's got the link for you there also. Okay, let's head back to the Zoomers and go to WINA from Perry. WINA, I like the code. It is a winner indeed. Look, this is amazing. This is everything I love to see. So I don't. The only thing is just the proximity from the green zone, but I'm sure you're probably already on it, Perry, so that doesn't bother you too much. So this is a plus 1/3. Yeah, no complaints there. The only thing that could ruin that is if I zoom out and see the most almighty supply zone, but it's just blue sky, and this is why. Opposite of, I guess, what Jay's doing, is that this is buying things that are going up because people think they're going to keep going up. People didn't buy it last night because they thought it was going to go up over the last 12 months. People bought it last night because they think it's still going to go up. Do I need to say any more? It's the perfect chart, really, isn't it? It's going to ebb and flow. It's going to pull back and it's going to do those things, but I'm happy to back that one. At least have a bit of risk on it to see what it can do. Really nice looking chart, and Perry's saying it is a winner. I wonder if it's a winner, Perry, on the fundamentals, on the valuation. Let's check that out. I'm very curious now. Now let's go in here, WINA. Oh, wow. Okay. That's a bit, I wasn't expecting to see a company that's doing so well have no broker coverage. So I can't give you a valuation on that, unfortunately. What a shame. Would have been very interesting. Okay. Jay, not sure. Jay, just pop in your in the chat if you like what J stands for. So well, maybe it's just J. But let's go NTR, which is here, Nutrien, I'm guessing. Ooh, a little bit of a pause there because straight up, and this is what the trends can do for you. This is how effective those colored ribbons are, aren't they? Is just like that. I can tell you straight up, I'm not interested. And what's great about the candles is you're getting colors there as well. And as human beings, we're such visual creatures that if I was scanning down a list, unless I was looking for shorts, I would just pop over this. It's Jill, apparently. Hello, Jill. So, Jill, I'm not sure if you're on it. If you're on it, commiserations. I don't think it looks very good. And I don't know if I can sugarcoat it any other way. And I've got to call the spade, don't I? There's some demand here. That's really your only hope. We're kind of beneath that demand zone as well. And unless you start to see those white candles pop in real quick, I think this is in some real trouble, especially given the broader market's actually had a few days up. So you can see how we've really underperformed now. We're starting to underperform the broader index. I don't like this one. Just the black candles as well. So there's just too many black candles. This is almost the opposite. In fact, if you inverted this, so completely flipped it on its head and changed all the colors opposite, so all the white candles, black candles, all the black candles, white candles, so you'd actually get quite a nice chart, which means that it must be not a nice chart. So this is a concern here. That's a concern. That's a concern. That's a concern. These are a concern. And then these are a concern as well. And I could be wrong. Tomorrow, we may well have the most almighty white candle that is quite literally this big for all I know. And I don't know. Okay. I cannot see the future. I wish I could, for everybody's sake. Okay. Can you imagine how many people would be in my webinars then? It could happen. Like, that's in the realms of possible, but I can only go on the realms of okay. And probably when people are considering whether to continue to own Nutrien or not, in those considerations, they are looking at everything else out there in the market and they're saying, you know what, I think there's better stuff out there. I think, look, market's rallied a little bit, Nutrien's up a bit today, let's sell some. Let's just get out of it. And let's go do something else better with that money. And that's the people who have Nutrien stock. The people who don't have, the people with cash, they're not even looking at Nutrien. They're looking everywhere else. How do you know they're not looking at Nutrien? Look at the chart. That's what concerns me about Nutrien. I'm curious because I wonder what we're going to get here. We may well get the cheapest stock in the history of mankind. So let's check it out. Now that I've said I don't like it on the chart, I've got plenty of broker estimates, 20 estimates. Look at their average target. So they are saying it is quite cheap here, 96.40. One strong buy, 11 buys, 9 holds, only one sell. With such a strong skew to the buy side, it's a wonder who's selling it in the market, and that is a great red flag for you when you look at these broker ratings. And even the targets is there's an excess of supply. A little bit lumpy in the EPS line. So down before COVID, and that's a concern. Obviously didn't do well in COVID, but a massive bounce back, that's impressive. And then lumpy again through here and lumpy through here until we actually get to a compound annual growth rate, which is not great. And I'll fix that. So it comes out as minus 14%. And hopefully, Jill, it's starting to make a little bit more sense now as to why the market hates this thing. Now, again, this is okay if you can get this cheap enough, but clearly it's not cheap enough. I mean, even at a P of 9, which is below the market average, it needs to be way, way cheaper. I mean, you need to be getting this at a P of 2, I reckon. And even then, it's still not cheap enough. So what did that say? Let's go there. 50. I wonder if I have to go to target. So 50, 10. Yeah, 1091. What's that doing? Why did that make that worse? I'm not sure. So sure what's happened there. F is 9. Target is 2. Oh, no, my brain has lost all function here as to why that would. No, because we're making the hurdle rate higher. We're making the hurdle rate harder. So of course that's going to get worse. I can't actually simulate what I wanted to show you. Is I think what is apparent here. I can't simulate this because let's just go with that explanation. Now I know why too, because if I make this 20, that'll go up, right? So I know that much, okay. But I can't simulate. I'm trying to think if there's a way to simulate this, and in the formulas probably not. But I'm saying you would need to have a PE of 2, right? This is our target. This is not what it is. Yeah, you'd need to have a PE of 2. So I'd have to change all of these to justify it. No, even then that wouldn't work. Anyway, I can't make this work with the spreadsheet. My point is, you'd need to have a PE of around about 2 to make this attractive, and it's not there. Anyway, this is crazy overvalued for me, even though the brokers, how about that, are saying something different. But the brokers, what the brokers are saying and what the brokers are doing are very different things. So I wonder whose spreadsheet is better, theirs or mine. Okay, let's have a look at a couple of these other ones here. Now this looks much better, so happy to add some risk here. Last night's candle is not the most brilliantly amazing one, but it's not terrible. I like everything else enough to go plus 1/3, assuming it's the best thing on your list, and I will discuss what the best thing is in a little while. Let's do that. So happy with that. Look, the price action is good, not great. We don't want to see the overlap here. So if you look at this, not bad. No, it's okay. And I'm just worried that I want to see how this old area of supply through here. See this little area? This is why I'm umming. I prefer to see that this last trough is sitting at or above that area. That's the only thing. But it's sitting above this little area in here. So that's okay. Good, not great on the price action. It has been consolidating. The short-term trend is fine. The long-term trend is fine. It's turning up. In terms of supply from the past, it's over here. And assuming at a big round number at 500, assuming we can make the reward to risk work, then no objections to going plus 1/3. But is that actually looking like a really nice turnaround play? We can see in the past how effective my long-term trend ribbon is at killing uptrends. And then also equally, once the trend turns, at telling you when to get back in. Okay, so not unhappy with that one at all. It is a ETF, so we won't look at the fundamentals because there is unlikely to be any. This is another ETF, which is the Sprott Uranium Miners ETF. We talked about this one yesterday in our commodities session, and we said that it was trading closer to the bottom of the range than the top of the range. That's important. We said it had made it a nice double bottom pattern, and if you were in the business of trading the range, then no objections to having a bit of a tickle here, but noting obviously that this is still down, and therefore it's a bit of a ho-hum. I think were my exact words. In fact, go check the tape. I said ho-hum sort of stuff, given that overall the trends are nothing to get excited about. And again, ETF, so we won't do the evaluation there. This one here, a little bit concerned about as well, mainly due to just the predominance of these black candles. We are in another trading range here, and I don't think we're winning the battle necessarily, because we tend to be now sort of trading towards the bottom end of that range, okay, sort of compressing down. I would suggest that if you can start to trade back up here, then we could consider it. That's what I wanted to do. Okay, that's where we are now. Let's go here, and if we start to trade back up here, then we could consider it. Until then, there's really nothing to do. And if we start to trade back down here, all right, then there is absolutely no reason to be in this one. In fact, you would be looking to manage your risk and take some exits minus 1/3 down there. Don't think I need to go any further on that one. And sorry, Jill said her name in there. I should read the whole comment. Sorry, Jill. And okay, not VIGL. VIG, not VIG. I think, did I? Okay, thank you, Jill. Hey, we got a bonus one there. Okay, another ETF. Not awful. Not awful. So there's some good stuff here, clearly, right? So, okay, so that's good. We're sort of interacting back with the long-term trend zone, which, let's face it, is flat. And the big pause at the start of my analysis is really expressing verbally, or non-verbally, I should say, what I was thinking, which is, this is a really hard one to analyze. look, we've got some good stuff here, but then we've still got some stuff which we're not so happy with here. And because it is just so sideways, it's very hard for me as a technical analyst really to say anything more than it's a 50-50 bet. I'm going to say maybe it's 55-45 towards having a continued rally. That doesn't mean it can't look good in the future, but it would just need to do some more stuff like this first, because at the end of the day, this is still a big area of supply, which would keep me away from it. So it's not really the sort of charts I'm looking for, unfortunately. And I know it's frustrating for some. Oh, I really like this. You know, I've done the research. It's I'm getting great dividends on it. But again, I'm giving you my opinions. We're looking at the market through my eyes. And I guess that's why you're here. If we wanted to look through it through a different lens, then you would be somewhere else. Okay, sorry for the confusion there, Jill, both in terms of you actually writing your name in the post and me getting the wrong stock. Barry asking for Loop. I'm pretty sure I got that one right. So I'm happy with this one, Barry. So yeah, look, I think your candle even before last night for future reference, and I know this is a big down, but this and this are just so important. And then this is the lock, right? For me, that candle's the winner, because remember what I said, Barry? It might have been yesterday's session where I said sometimes we want to see some supply. Sometimes the best thing you can get is a bit of supply in the market after a run up, because the candle you're going to get after that supply hits is going to be really, really descriptive of what's happening. And we did see some supply that day. Black body, you can see lower shadow, it came down. But look what it did in that candle. And if you're not sure which candle I'm talking about, this is the one I really want you to focus on in here, okay? This is so important for understanding candlesticks, understanding demand and supply, and understanding my whole approach to markets. Supply came in, and yet I would argue there was very little supply. Actually not that little supply, Barry. Look at this. So we're still at elevated volume, certainly from here, certainly from through here. I mean, certainly above average. There's supply. In fact, you know, there's actually, look, it's a bit of supply there, a bit of supply here. I mean, these are the big days, right? And let's just get this going here. And that's the one. Yeah, okay, so there you go. So look at the supply removal. So when you pair up this price action and volume, they speak to each other, right? So this is massive supply removal. How do I know supply was removed? Well, look at the candle. How do I know a lot of supply was removed? So it's massive supply removal. We'll look at the volume, okay? Huge volume means that there was a bunch of selling. How about that? Everybody says, oh yeah, you need to buy something because it's going up on big volume. Not so sure about that. Certainly when you start a trend, okay, start a trend, yes. Yes, you want a surge in volume, yes, but in trend, no. You in fact you want the opposite. You want as little volume as possible. Okay, and I'm not even going to explain that. I'm going to let you think about that and ask me about that maybe next time after you've thought about it. But certainly we want massive supply removal to get a trend going, because once we remove that supply, think about what supply is. Supply is shareholders, right? When you remove them, by definition, you've traded with them with demand. What's demand is cash. You've given them cash. And this is a stock that they were holding on to forever, like just lamenting their bad luck for buying Loop Industries, the worst company in the world. And they got out. And now, boom, not just one day up. Think about how they feel the next day. Holy moly, they want back in, don't they? And good news is they've got cash to do that. But this is massive supply removal. And then look at how little supply there was in this day, Barry. I'm getting to the point here. And the demand soaked it all up. And this candle kind of afterwards ends up being inevitable. So I know you're asking about it today. I think yesterday is the one you want to look out for, long story short. But little upper shadow, not ideal. Look, let's give it another candle. So I was about to just write plus 1/3 on it, but let's just see again. This is a little bit of supply here, what the supply side response is. And if you see another candle like that one, then I would go plus 1/3, only because we've actually hit the zone as well, to be fair. But these are very interesting turnaround plays. These are very interesting for adding risk. And certainly after the first white candle, you could cheekily do it just because it's so big. Certainly after the second white candle, you could do it. And most certainly after the third one, you could do it. Now, just that little shadow's got me saying, well, let's just see how the next one plays out. I could be wrong. You should just buy it straight up. Bit of a long explanation, but some really important concepts about price action, about demand, supply, and understanding. I think you read a TA book and they say, the RSI should be going up, and they don't tell you, well, why is that important? Yet when you look at the market through this lens, it's hopefully giving an understanding of what's happening behind the scenes, what's happening with the people who own shares, what's happening with the people who have money, who want to own shares or not want to own shares. I'm not getting a lot of love on this one, unfortunately. It's not making any money for the foreseeable future until FY26. I can't give you a valuation on it, so let's keep moving. I love those, so yeah, keep them coming through. Very interesting chart. And probably first pass, when you look at it, say, oh, Carl's not going to like that one. But no, there's plenty to like. There's plenty to like here. So this is so similar in that trying to find these moves. And I wish this was a better candle, because if that was that big white candle, then I could say, that's the one you go on. But it wasn't. You're waiting for the supply side response, and that wasn't helping you either. This is very important. So that really confirms the move. And then up here, obviously, this is a problem. Okay, so this is some significant indecision, and then this confirms that we are probably going to get some supply. This is important as well, because it says that the supply has washed out of the system. So yes, we're going to get a pullback. Yes, we're going to get a supply. Why? Because it's gone from 0 to hero. And this one is not great. This one is not bad. This one is super interesting candles. Some that almost don't even make sense. This one is not even making sense. This one's okay. Could I add some risk to this? Look, I would say yes, if this wasn't such a dominant zone. But let's zoom out. So obviously there's going to be some. You're giving me some tricky ones today, everyone. All that is to keep going to find the next point of supply, which is over here. Next round number is $3. Yeah, I don't mind. Look, again, we're talking about having dipping a toe in the water here. And is there anything else better than this today? I haven't seen many. So yeah, I'm going to go plus 1/3 on that one. No questions. I'm pretty happy with that one. After I have considered it. Let's go to EMAN over here. Interesting. This one also for Barry. Not a lot to go on there, Barry. Let's keep moving and go back to here, which will give us TAYD. And ordinarily you look at that and go, it's too late. I mean, look at yesterday, to be fair. I mean, that yesterday was a cracker. Yesterday would have been, just about 10 out of 10 for me. Just based upon this. Oh, if I can get it. Just based upon that. That's amazing to see that chart buy it. What do we do today? Look, it's a long way away from my light green zone. It's a long way away. That's the only reservation I have. Otherwise, it's such a dominant candle. And I know it seems crazy for some that are probably tuning in and saying, this guy's must be on something. He must have been happy pills to say plus 1/3 after that. I'd never buy that. It's got up too much. But we've just got different ways of thinking about the markets. Let's come back. Let's have a look at these next week and see. Actually, we won't be next week because it's Good Friday. We're going to have a session on Friday. Amazon. Is this the price action we've been waiting for? Look at that. I've covered this one many times. We've noted, perhaps lamented, the power of this long-term downtrend, and that we really need to put in some good price action with the right candles before this could become a buy. Has it done that? Well, I actually think there are some pretty good candles in here. So, I mean, that's not ideal, but, it kind of did the job. So did that one. They're okay. This is a bit weak through here. It's just a bit weak. It's not convincing, which means I probably don't want to take the risk here on this being another one of these situations. But look, let's keep looking at it. If the candles do start to really lock in like this, then probably we can get a little bit more excited about it. Yeah, look, and we'd like to take a mix of these turnaround plays and the bottom left, top rights. I just think that there are better turnaround plays that we've seen today than that one. Back to these are dual. So Microsoft, MSFT, and I'm sure we looked at the fundamentals of the last one, the Amazon. So you refer to last week's edition. This one's still looking good, so we're happy here. We said quite correctly if you'll remember, that if it closed beneath that low, and I would have done exactly this, I would have hovered over it and said, if it closes, say, below 269, we're going to lighten the load. It didn't do that. In fact, we actually got the right price action through here, and some good candles, actually, this one and this one in particular, very good. So we're actually not in reducing risk on this. Obviously, you can see where we've been adding risk in the past, and I think we're going to continue to go plus one. Even on last night's candle, I'm happy to do plus 1/3 if you're not in it, to continue to add risk to Microsoft, because literally 3 breaths ago I said that I think there are better turnaround plays out there than Amazon, and this is a great example of one of them. I know Jill's asking if she's already got Microsoft, probably wondering if Amazon's good to go. And I don't think it is, Jill. I think there's still some more work to be done there before we get a setup that starts to look as good as this. And the other one which is doing quite well is Meta, which we've also said the same thing. Points to get in, points to get out. Obviously, it didn't get to those points to get out, and then adding a third. You can just see how the methodology works. So you're probably carrying a full position on that one now, and pretty happy about that. Perry asking about CSPI. Actually, yeah, looks good. We're finding some good charts here, so there's nothing in here that tells me not to go plus 1/3, and I could be wrong. Again, I can't see the future. I know I keep saying it, but we don't know. I mean, we could get, I don't want to jinx it, but Perry's swearing at me, right? Say, Carl, you such and such, don't even draw it on the screen. It could be, I don't know. All I can say is that is not the probable scenario. It's a possible scenario, but not a probable scenario. We're getting pretty close on time. And I've done all of those, and I've done all of those, and I've done all of those. Let's try IPD Group, and I'm not sure if this is from Trader asking about an Aussie stock or a US stock. I suspect it might be an Aussie stock. Just remind a Trader that we do the Aussie shares on Tuesdays, so we're just doing the US shares today. Well, I wanted to do this, but didn't have as much time. That's the Aussie scan, and what I will do here is I'll just change it up a little bit. You can't see this screen, unfortunately. It's just the way OBS works, but I want to change the filter here, and it's the same scan as I do in Australia, but it just has a higher hurdle rate for the required turnover. So my Australian scan has a $200,000 minimum turnover per day, and in America I jacked that up to $2 million, 10 times the amount for Australia. We've got the right date there, so I get the again, you can't see some of these pop-up windows, apologies, but do that, and what you should see is the exploration work through. So what I wanted to do is actually go through some of the stocks which Barry and Perry have done really well at highlighting, which would have some great trends. We've probably run out of time, so let us, if that doesn't happen very quickly, maybe adjourn. And there's scope to do this. I just, unfortunately, got to balance out answering your questions with trying to do this, and maybe that's another session we can do some other time, where we actually just literally, what I'd love to do is just run the scan with you and then show you literally chart by chart what I'm looking for, how I turn this, because this is going to be a list of probably 500 companies, turn that into a list of maybe 25, 30 companies, and then turn that 25, 35 into a list of maybe half a dozen that we're seriously thinking about trading, work through where the entries are, where the exits are, and placing trades through the platform. Maybe that's a whole other webinar itself. I mean, there's lots of stuff I want to do with you all, but unfortunately time is a bit of a drawback in these live sessions. Look, just encouraging you while that's running in the background to register if you haven't already for the other ones, but I know you probably have, so I won't labour that point. And I won't labour this too much, but if you are not a client of ThinkMarkets, you really should be. All the ASX shares you would like to trade, $8 flat rate shares sponsored, and then all the CFDs you can trade. And with respect to the US shares, we're doing those via CFDs in your ThinkMarkets account, and they are commission free, which is just so important. I think especially when you're starting out learning how to trade a particular asset class, if you can do that without commissions, you're going to be miles and miles ahead. Because let's face it, if Microsoft goes up 5 cents, that's 5 cents worth of profit instead of 5 cents towards a round trip brokerage. So I think that's really important. And where else would you want to do it apart from ThinkMarkets? Award-winning broker, regulated in half a dozen different jurisdictions around the world, where we are safe. easy to use platform, and dedicated account manager for you as well. Look, if you're watching on any of the streaming services, hit the subscribe button, because maybe I will be going live there with that session where we literally work through step by step on finding the best trades for a day, and hit the thumbs up button to let me know you like what I'm doing, so continue to do more of it. Let me just see how that's gone. We do have a list, and let's just have a look at a few of them, if only to just see what they look like. So click replace results in here, and just out of curiosity more than anything else, in this list here. Okay, well, there you go. Goldman Sachs Physical Gold ETF. That obviously looks very good. And then you can see my my shortlist here. That's a shortlist from Australian shares yesterday, because I'm actively, doing this work and trying to find great opportunities for ThinkMarkets clients. And then I also have another shortlist as well. So I'll raise and make those empty. And then that's one I would put on the shortlist. So I literally go, I did that probably too fast for you, but and you can't see the pop-ups anyway, but I literally go watch list, add, and then I click down and it goes into the next list down. You can see the building up in there. And then once I've finished that shortlist, I then will go through that list and then get them into that list and keep working down until I've got my final list. But that looks very good as well. There's Apple. How about that one? We've been very positive on getting shortlisted. I'd even shortlist that. So this might be a bit of a problem here because there are very good, and you can see I'm skipping past a few, and maybe I've tuned your eye in enough to see why I would skip past some of these. Look, this looks really interesting. Airbnb. I'm going to shortlist it because I do like to have a mix of turnaround plays. I'm not sure if it's going to make the final cut though, to be honest, just because the trends are a little ho-hum, but I want to go look at that, but sometimes I just want to keep things in my mind. That looks very interesting, but I'm going to skip past it. I think if we get the signal on that one, we'll get a better signal on that, so I'll probably just move past that. That looks interesting, and I could shortlist it, but I reckon I'm only at A's, so I'm not going to get too excited. I reckon I'm going to find better stuff than that, but it does look very interesting for turnaround play. And compare and contrast some of these that I'm quickly going past, and some that I'm dwelling on, to some of the ones we looked at today. Look, good. I think the supply is too strong up there at 72. I'm going to keep moving. I'm going to keep moving. Too much supply. That looks very interesting, so I might shortlist that one. Didn't like the last candle, and I'll start to get more picky as I go along, because I've got more idea of what's out there. You can see I'm just breezing. So I won't do this fast though, everyone. I literally do it this fast. So no, that I would shortlist, and I won't do it because it'll take too long. But that's the last one I'll do because I'm going to do this for myself later on. And no. Yes, shortlist. I like it too much supply there. So no. It's not bad. Pop it on the shortlist because I don't want to spend too much time here. You can see why you don't want to spend too much time. You don't want to get bogged down. You want to just keep going. No. Shortlist. No. Shortlist. No. And you can see that if you know what you're looking for, and look, I'm looking for the colors and the ribbons. I'm looking for the candles. I'm looking for those big points of supply. All the stuff I've taught you. Anyway, this is a topic for another session. But thanks for sticking around. If you did, gives you a bit of an insight into hopefully where we can go in the future. Okay. I will catch you later, of course. And before you go, don't forget that everything we've discussed today is general in nature, has not taken into account your personal financial circumstances or particular needs. So before acting upon any of this general information, please consider it carefully or seek the help of a financial professional. If you'd like to know more about ThinkMarkets and our products, head to our website and download our PDS, our product disclosure statement, and that will tell you all about us. Thanks for watching. Bye-bye.